Thursday morning. It's McCollum on Business, and I'm Stephen McCollum. And for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world this morning. And lots of movement over there in the Middle East is the fisticuffs has started again as of last night. There over the Strait of Hormuz and Iran, U.S. We'll get you updated on that. Kind of what's the market doing on that with the market watch, of course. We look into stocks we're paying attention to. And SpaceX getting ready to go public probably tomorrow is what everybody's thinking. So we'll look into some of those other space stocks out there and the stocks we're paying attention to later in the show. Of course, national, local stories that you need to know as well. Folks, biggest sporting event in the world gets kicked off underway here today down in Mexico. The World Cup goes. And later on, if you wanted to go to a game, what does that mean compared to your mortgage? I have that story coming up for you later in the program as well. And folks, let's get right into it with that Market Watch. And so, if you don't know what's happened overnight, they shot down that Black Hawk helicopter. The service members on board that were able to be rescued and everything. Well, President Trump started bombing and attacking Iran again. Iran responded again. Trump went back again. The U.S. went back and attacked some more. Now Trump is threatening to seize Iran's oil export terminal, that Karg Island, and even take total control of its energy industry this morning here as well. Well, what does that mean? Oil is back up. Oil's back up above $90 a barrel as the threat to take over Karg Island is out there. Even Iran threatened Elon Musk's companies in the Middle East as well here this morning. So kind of raising up here. But from what you heard last night, which is giving optimism to the markets, they've been negotiating through proxies, meaning Pakistan and I think Turkey as well. Well, they directly called the White House last night when that bombing started. So maybe that'll spur up an agreement here to get this solved. But all of that being said, oil up over 90. Market, as you can see, all up today as well. Stocks have rebounded today. Chip stocks rebounding as well. But again, kind of there is a holdback, believe it or not, based off of this new Iran threat. We're not sure if it's going to escalate or settle down. The Dow Jones right now is up 407 points, 50,280 today. The S&P 500 is up 62 points to 7320. The Nasdaq, it's up 400 points as well, 28,974. Then you got the Russell 2K, the small cap index up 65 points this morning, 2883. Bitcoin, big up today, 1,249 points, but still in the 62,000 range, 62,698 for Bitcoin here today. So the market is just kind of, all right, we're moving ahead. I think a lot of the sentiment, at least in the Wall Street side, is this rise in escalation and the direct call from Iran to the White House last night. Kind of says, all right, Iran's done playing games, and maybe they're ready to settle this situation going forward here on the market as well. So we'll continue to keep our eye on that as well. Stocks we're paying attention to right now. Well, in this segment, we're only going to look at a couple. We got a bunch of them coming up, the space companies later on in the show. But first, we're going to look at Intel, obviously a big presence here in the Chandler area here in Phoenix. 9.79% up for Intel today. They were double upgraded. They went to buy. They were underperformed before by Bank of America. They cited the rising demand for central processing units among the increasing focus on agentic artificial intelligence, meaning there's more demand for the Intel chips out there. That's why they're up 9.35%. Bank of America double upgrading them to buy here this morning. And then there's Oracle. The opposite's happening with Oracle. 11.41% down right now. They're a software company running a lot of the AI data center softwares and things. Well, they need money and things to continue to build out on that data center side. Oracle's down 11.38% right now because, well, they plan to raise an additional $20 billion in equity and debt to pay for that AI build out that they need to do. The company did report an overall beat on both the top and bottom lines. They raised adjusted profit forecast for the year, but down because they're having to raise revenue of $20 billion just for the AI portion of their business on their build out. And that we're getting a lot of these companies, Meta included, Alphabet, they're spending on capital for AI, what their revenue is in a year in terms of, excuse me, profits are for a year more than that. So it isn't amazing how it goes, but the capital expenditures take the hit there with Oracle. As I said later on in the show, we're going to take a look at the space companies out there. Lots of losses yesterday for these space companies. We'll look at this later on, but SpaceX initial public offering, and we knew it would be between Wednesday and Friday, obviously, and now being it's Thursday, we're expecting it tomorrow. So we'll look at those space stocks here after that sell-off that happened yesterday for them. So we'll look at it. Intuitive Machines, Redwire, Rocket Lab, AST Space Mobile, all coming up there. Obviously, competitors to SpaceX coming up also here later in the program. But first, right, we got the CPI report yesterday, the consumer side of reporting. Well, today we get the wholesale prices. Not much better than what we saw yesterday with the CPI. This is the PPI. Well, it rose more than expected in May, indicating that inflationary pressures in the pipeline, well, they're getting higher. We get all these reports from the Bureau of Labor Statistics. So this producer price index is a measure of final demand cost, basically what hits the consumer or the end line where the consumer's buying at. Well, it increased the seasonally adjusted 1.1% on the month. So the year wholesale inflation rate is at 6.5% as of now. Yeah, the expectation, they're looking for a monthly move of 0.7%. Inflation's hitting the wholesale side, which of course then pushes along to the consumer side as well, which we saw yesterday in the CPI out there. Yee. The annual headline inflation rate. I have no other. That's my professional opinion, by the way. Yee. The annual headline inflation rate was the highest since November of 2022. The monthly gain matched the April increase. But if you want to exclude, the food and energy, which are the most volatile, so this would be the core PPI, it accelerated 0.4%, while the consensus view was 0.5%. So it came in underneath the core PPI. So the rising fuel prices, they're, again, just like we saw yesterday with the CPI, the rising fuel prices are causing much of the inflationary burden. All coming from the energy sector is what we are learning with these two reports. So if you take out food, energy, and trade services, which are the three big ones here for these reports, well, the PPI accelerated 0.8%. That's the biggest 1 month move since March of 2022. So if you look at that 12-month basis, well, the core excluding trade services rose 5.1%. That's the most since October of 2022. The most of the acceleration in the PPI, which by most I mean 80% roughly, it's just under 80%. It came from a 2.8% surge in final demand goods prices. That's the biggest increase ever in this data series going back to December of 2009. So if we look at that specific almost 80% number, well, 80% of that rise came from a 10.7% jump in energy prices. Gasoline rose 23.4% at a wholesale level last month as well. So gas, oil pricing is causing all of our inflation, according to these last two reports, at least CPI and PPI over the last couple months. So the services side of it, which is a significant contributor to this inflation as well, it actually came from one specific area: portfolio management fees. They increased 4.8% during a strong May for the stock market, which means management fees for people, their stocks are going up, management fees are getting higher, and that's also leading to inflationary numbers here on that services side. So, what does this mean? Well, inflation is up, as we know from the CPI and then the PPI report here as well. And it's most likely to keep the Federal Reserve on the sidelines. No rate cuts, no rate increases coming up for pretty much the foreseeable future. The central bank's Federal Open Market Committee releases its net interest rate decision coming up next Wednesday. The market pricing is indicating a near 100% probability of just a hold, stay where we are. But Traders are pricing in no chance of a cut through the year and a better than 60% probability that the next move will actually be a price hike. But they do say that price hike, if it comes, will not happen until December of this year, is what the market's betting on. But earlier today, the European Central Bank, they actually voted to raise their benchmark rates by a quarter percentage point. They're trying to head off inflation over there in the obviously the EU and in that markets over there. So they've done a price hike over there in Europe. As of now, not expected to happen next week when the Fed meets, but the pressure is getting more and more on the Federal Reserve with its inflation rates getting higher. Obviously, if we can get, not we, if the government can get down the gas prices and the oil prices out there to a sustainable level back to where they were, inflation will, according to these reports at least, inflation will go back down, as that is the number one cause of inflation that we are looking at now, energy prices. Another thing that isn't affecting the market as much as you thought it would, but now there's major refunds going on. We're talking the tariffs again. The U.S., we found out this earlier today. The U.S. paid out $21.97 billion in May in refunds on tariffs. That's tariffs plus interest as well, right? That edged out the $21.93 billion in tariff revenue that they took in May. So spending more in refunds than we are in actually getting in on the tariff amounts. So this net negative reading is $42 million. Well, for the U.S. government, for you and me, $42 million is a lot of money. For the government, it's literally a rounding error. They don't even pay attention to that number difference. Yeah, must be nice, right? The tariff revenue picture could be cloudy for a bunch of months to come as rebates continue to go out, or refunds, excuse me. They're expecting an estimated $166 billion in tariffs plus interest to be going back out. That's what's eligible for refunds for businesses. The Trump administration had been making moves to try and limit some future payouts of those refunds. Well, this release that came out actually came out late last night. It covered the first full month since a government run tariff refund portal opened, and businesses could start applying. I know a toy maker, they didn't say which ones, but a toy maker and I think a ship maker were the first two to get their rebates in early May. But that shows you the amount of rebates getting put back out. It's basically making it a zero tum here with those tariff numbers going forward. Now we can go on another side. If you're planning to travel this summer, God bless you. I just read nothing but horror stories on airlines, but more importantly, just how pricey tickets are, right? Just to fly to LA, couple $100 if you book it a few months out still. And that's all because of the fuel prices for these airlines. Now we have hard figures here. So approximately $6 billion. I'll get into the specifics in a second is what U.S. airlines spent on jet fuel in April. 70%, 78% up from a year earlier. And here's the kicker. They even used less fuel than they did a year ago. Yeah. This is all released Monday, released reporting from the government this week. The airline industry's top global trade group, they warned that the soaring energy costs could have profits for these airlines in 2026. So we know airfares have gone up. We know fees have gone up as well. We know perks are being cut between the airlines and everything. Canceled flights, trimmed schedules. We talked about American Airline cutting some routes here for August and September. It's about six routes coming up. Well, U.S. carriers, the exact number is $6.5 billion in fuel costs for April. If you want to compare that, I said 78% increase. Well, it's about $3.6 billion last year. Bureau of Transportation Statistics gives us this number. Fuel consumption in April totaled 1.573 billion gallons. Well, that was down from the 1.575 billion gallons last year. So using less, huge number increase in expenses. Yeah, this all comes as the International Air Transport Association, which is a group that oversees the airlines, trade group with them. They released a report on Sunday saying it now expects airlines worldwide to earn a combined $23 billion in net profit this year. Sounds like a lot of money, right? Well, the forecast going into this year was $41 billion. And that was still even below the number for 2025 that they actually came in with, 45 billion. Well, that group said jet fuel prices are expected to average $152 a barrel here in 2026, 70% higher than last year in 2025, which means the global airline fuel bill is going to be about $350 billion. Last year, only $252 billion last year. The fuel is forecast to account for more than 31% of airline operating expenses here in 2026. Normal year, and last year specifically, normal years, it's usually around 25%, and that's what it was in 2025. So huge expense cost here. And then obviously labor being the other big one. In the U.S. specifically, the cost of a gallon of jet fuel in April was $4.11 for jet fuel. Last April, it cost $2.31 here in the U.S. for a gallon of jet fuel. So that's why you're seeing the high prices here for airline costs for the flights. That's why you're seeing your perks taken away. It's why you're seeing flights canceled. Yeah, trying to mitigate this exorbitant cost here for the airlines. Now we got true numbers to it as well. It's kind of eye opening when you see those numbers out there, and just kind of a health thing here for you and heads up going into next year, right? I know we got a few months here before we still, you start doing your open enrollment. What is that, October timeframe when that happens for next year's medical stuff with your companies? But plan ahead. And if you're thinking about going on those GLP-1s, now might be the time to start. Well, some employers, they're planning to drop coverage of the GLP-1 drugs, specifically for weight loss. The diabetic side, they said they will keep because more people are taking the medications, and that is counteracting some savings from lower, that these companies were getting. Now the amount of people on them, it's causing those expenses to go up. Well, there's good news and bad news on this. Bad news is they're dropping you. But we'll talk about maybe a good side. But 10% of employers who cover GLP-1 drugs right now for weight loss said they plan to drop the drugs in 2027. Now, this is according to a business group on health company putting this out. They're a policy research group for large employers. So they're talking specifically companies over 500 employees right now, which means the smaller companies, if they are covering it, would be looking at the same thing. A second survey by benefits consultancy Mercer, they said 5% of large employers, they plan to drop coverage of the drugs in 2027. Again, companies over 500 people. Mercer said 44% of companies with more than 500 employees cover the drugs for obesity. Well, data from the Bureau Group on Health does show 67% of large employers cover GLP 1s in 2026. So take 10% off of that number. Health insurer Cigna, for instance, they ceased coverage of weight loss treatments for its own employees effective this July. Reuters reported that this month. So that's where we got that reporting. But why? Cigna, the health insurance company, they say that consumers, their employees, they could buy the medicines elsewhere, and they say for cheap. So here's the good news. There isn't really. But I guess if you're looking at it, good news. Just because your company drops you doesn't mean you can't buy it elsewhere. And in their eyes, you can buy it for a cheaper price than what they can buy it for. That's what they're telling you here, right? We know there's discounts on it if you're paying cash and stuff to that effect, but it's still hundred and something dollars a month for those services, and you got to have that money obviously to go forward on it as well. So that's what they're saying. Good news is you can buy it elsewhere. Bad news is it's going to become out of pocket instead of them covering it. And these companies are saying because of that independent media that negotiates this, they're saying you can buy it cheaper with cash than they can get it through that negotiation process. But if you want to get on it and you want your insurance to cover it, get on it sooner than later because at the end of this year, it might be working for a company that no longer covers it moving forward as well. And a lot of talks here on data centers, and we got some stats here for you, which kind of shocked me here because we talk about data centers a lot. And out by my house out there in the East Valley, it feels like there's 700 data centers out there, and they're planning on building like 20 more, it feels like. Actually not that many here in the United States. I'll give you that stat in just a minute, but we know the tide's turning on data centers and people don't want them around anymore. Electricity costs go up, water costs go up. Now we find out that just 1 in 3 Americans approve of data center construction, you know, out there. Yeah, people are opposed to building one in their own community. 1 in 3. This is all a new Reuters ISPOS poll out there. This poll results reflect widespread public unease over the data center boom in the United States, and it's high on the mind of voters as well, which means it's political campaigns are paying attention to it as well, obviously, because we have the midterm elections coming up. President Trump's administration has prioritized rapid AI development, as we know. They say we have to compete with China and stay ahead of them, and has directed federal agencies to accelerate permitting for infrastructure tied to the data centers. Now, this was a 6-day poll and surveyed 4,531 people across the country. It did close on Monday of this week, but it showed just 33% of Americans agreed with the statement that it was mainly a good thing to build data centers at a rapid pace. 64% roughly agreed, or disagreed, excuse me. So you're seeing a big switch here from, yes, we want them, to, no, we don't. Support for the rapid data center construction was a little higher among Republicans than among Democrats. 57% of the people surveyed, including 2/3 of Democrats and half of Republicans, said they would oppose a data center being built within their community. Some of that concern, water and electricity costs going up because of these places. And we're seeing it out there in Mesa. They're seeing, and you're seeing it if you have APS as well. You're seeing your prices rise because of those data centers. 14% of survey takers said they were okay with the center being built next to them. There are 710 data centers now operating in the United States. Like I said, I feel like there's more of them out there. Only 710. I know that's a lot because they're big, huge buildings, but I'm still like, man, feels like there's billions of them. But there is 1,062 planned projects coming up as well, according to that listing. So the tide's turning on public perception of these data centers. One, they're big, ugly buildings. NTT out by me does build some nice ones. They actually are nice-looking buildings. Other ones are just big blocks, but they don't bring as many jobs, right? Big swaths of land, tons of energy, tons of water, not a ton of jobs to your community. That's kind of where you're seeing the backlash coming up on those 3 sides of it. We're getting some actual hard figures there on how the tide's turning against those data centers. Hey, folks, when we come back, we're going to look at space stocks with the SpaceX initial public offering that's expected coming up tomorrow. We'll look at some space stocks out there, of course. A couple local stories for you, and a not so good story coming up here to end the show. Sorry, no food stories today. I know that's disappointing to me and a lot of you out there. Hey, appreciate you joining us. Come on back. We'll keep it rolling. Local stuff. Come on back. McCollum on Business. And we're back here, McCollum on Business, here on this Thursday. Appreciate you joining us. course, we're live on YouTube, 7 a.m. TME Media AZ is where you can find our live programming. Of course, everything on demand here as well. Make sure you follow, like, subscribe, share us with your friends out there. We'd greatly appreciate it. But folks, of course, we're one day away from another episode in the Charlie Kirk saga that The Real Matrix is doing right now. Well, it'll be up tomorrow at noon. Now, YouTube does not have The Real Matrix. No, it's over at Rumble. Rumble.com/user/TME Media is where you can find that programming. Also, free podcast system. Or just search The Real Matrix Angry Patriot on your favorite podcast system. For those of you that'd rather listen to it out there. All of our programming is on demand on Rumble. Pit Stop will be up later today as well by 2 p.m. It'll be up there on Rumble. Everything's on demand over there. And, of course, over on YouTube, TME Media AZ, which is our parent company here of our production company. It's the parent company of our shows, I should say. Well, it's also on YouTube. Everything's on demand there except for The Real Matrix. And, folks, as soon as we get done here, we put this show up on demand on YouTube and Rumble. Then we go into the main event, 8 to 10. Today, Uncle Lou joins us, talk college baseball. College World Series gets underway this week. Of course, the hockey series is going. UFC coming up. The White House card is this weekend. Big card with huge fights. We're going to spend some time on that today between 9 and 10 o'clock today. Whole show, 8 to 10 here, live on YouTube, TME Media AZ. Of course, as soon as we get done, we put it up on demand on YouTube and over on Rumble as well. So make sure you check it out, however you like it, whatever your favorite platform is. Catch out our free podcast for our shows. This show does not have a free podcast system. All the other ones do. Pit Stop will be up today by 2 o'clock. Follow the Pit Stop Talk on X. Get you all the updates there. And I love to talk racing with you over there. The main event, TME Sports Show, of course. Hit us up there. But you can also join the chat here on YouTube for any of our live stuff out there. And let us know kind of what you're thinking as the show goes on as well. Like, for instance, Ann says, we just did our open enrollment and our insurance rates went up 15% due to pharmacy usage, which included the use of GLP-1s. Yeah, and I don't know hopefully I explained it properly, but the reason why they cannot buy the GLP-1s drugs as cheap as you can with all the Trump RX stuff and everything. And that's why you're seeing it up to that point as well. That's the danger that these companies have and why they're going to look to drop them. Cheaper for you to buy them. I know it hurts for you, obviously, out of your pocket out there as well. So join the chat for all of our live shows there on YouTube as well. Love to see you over there. Of course, we have the text line, 623-252-6670. You can hit us up on X on our shows as well. Oh, it's so much fun. And wait for you to interact with the show as well. So make sure you do so if you're so inclined, or whether it's just to say we're dumb as well and you have a differing opinion. We love the conversation out there. And folks, with all that being said, let's get right into the Market Watch. As I said, lots of question marks over in the Middle East, more so today than it has been in the past, but markets are up today. 335 points up for the Dow Jones right now, 38 points up for the S&P 500. Let me check here and get updated on the NASDAQ. It is up the 142 points right now as well for the NASDAQ. Then you've got the Russell 2K, 56 points up for that. So everything going up here, even though the PPI and CPI report coming in with hot inflation. Chip stocks through the roof. Stocks rebounding today. Trump-Iran threat is overhanging the market here today. It doesn't look like it, right, with the way it's going up. Everything I've read on it is there seems to be, with that direct call from Iran into the White House last night, no more going through the intermediaries in terms of a negotiation. Kind of gives optimism. Iran's tired of being bombed, and it's going to go away here soon as well. We also found out yesterday that Trump said 22,000 barrels, I think he said, has been, it might have been more than that. I could be wrong on the number. Said that they were sneaking out of the Strait of Hormuz at night, which is where they think that Black Hawk helicopter got taken down by that drone, was they were kind of assisting ships getting out of the Strait of Hormuz as well. Crude oil is back above $90 a barrel here today, with the threat that Trump will take over Iran's Karg Island and their complete energy sector. here today. So oil is creeping back up. Wholesale prices rising 1.1% in May, more than expected. CPI was up yesterday, all around the surge in energy. And that's what's driving the inflationary costs right now. Stocks we're paying attention to, well, as I said, we're going to look at the space companies right now. And it's all because space companies were actually down yesterday overall on the market. But then SpaceX is doing its IPO this week. And obviously, being today's Thursday, we haven't had it yet. The expectation is it's going to happen tomorrow as well. So we're going to look at Intuitive Machines is the first one we're going to look at. Rebounding today, 8.84% up. Then you got Redwire out there, also up today, 5.31%. Rocket Labs, the next one we're going to look at, 2.76% up. And the last one, AST Space Mobile. A lot of these are competitors to SpaceX, who's about to go public. 5.50%, all sold off yesterday, all rebound today. They're going to probably take a hit when SpaceX initial public offering does go out, because that'll be the focus. Might go down, so it looks bad. I expect them to go down tomorrow, but I expect these companies to do fairly well. There's enough business for everybody out there. You'd like to think. At least we've seen that so far here on the market. So space stocks obviously being watched a lot here with SpaceX stock going with its IPO supposedly tomorrow coming up. Hey, let's look at a local story here in solar and battery storage. Well, here in a new quarterly report, it accounted for over 90% of new energy build out nationwide. Yeah. All that despite federal changes from the Trump administration that there's no more incentives, right, for solar expansion like there used to be. The Solar Energy Industries Association, they actually came out and said Arizona was among the top 10 states with the most solar energy build out in the first quarter of this year. They added about, here in Arizona, we added about 340 megawatts in that first quarter. That's enough energy to power more than 50,000 homes. How many data centers does that power up is the bigger question. Overall, Arizona ranks fourth nationally for total solar capacity at about 12,000 megawatts. California and Texas have the highest solar capabilities in the country, and they're interesting enough, they're about 5 times the size of Arizona. So we have a huge amount, but California and Texas, 5 times roughly the amount here of Arizona. We have some catching up to do, I guess. Now, this is a local company, but they're expanding out of Arizona. But if you live in Denver, if you know anybody that does, call them up today and say, Rafi. I'm doing this for two reasons. One, Rafi Law Groups is officially expanding into the Denver market. But two, I just wanted to get that song in your head. So they're opening its first office outside of Arizona. Yeah, new location up in Denver as well. Obviously, this is a big milestone for the company. They are Arizona's fastest growing personal injury firm, and obviously want to do more of a national expansion strategy for them as well. So, for the firm's founder, Mr. Raffi, well, Denver represented more than just a promising business market. Apparently, they have a lot of personal injury stuff. So we wanted to expand up into that. So local company started here. You got Morgan and Morgan and husband and wife injury law, the big one, the national one. And it's interesting how these things expand. Let's just put it that way out there. But Raffi Law Group doing its expansion here as well. And today, well, the World Cup kicks off here in Mexico City. 2 games today, one at noon. I don't remember the time for the second. Mexico gets underway at noon here today. But it's a 6-week event expected to draw between 5 and 6 million fans across 16 North American host cities. That includes Canada and Mexico, including today's start games. U.S. gets underway tomorrow, I do believe, is when their first game is over there in L.A., their SoFi Stadium. But for many U.S. fans, well, getting inside of the stadium is not something you want to do because it's a major financial hurdle. Realtor.com came out with this study. This is fascinating to me. Because we talked about this on the main event the last couple of days. The prices for the finals tickets there in New York City for the New York games there of the Spurs versus Knicks. People are spending $10,000 for upper level tickets. It's a lot above your rent and things, right? In 5 of the 11 U.S. host cities, the cheapest available World Cup tickets for late stage tournament matches, so this means elimination round, semifinals, into the finals, those prices for games cost more than the average monthly mortgage payment in that market. They did the Realtor.com did this reporting. It means fans in Miami, Dallas, Atlanta, Kansas City, and New York area, they could spend the equivalent of a mortgage payment, most of the time more than that, for just a single seat. The figure doesn't include any travel to get there. That's just the seat. So no food once you get there, no parking, no buying a shirt. Just the game ticket will cost you more than the mortgage in that city. The steepest prices, obviously, are for the finale there at MetLife Stadium, East Rutherford, New Jersey. There at MetLife. The least expensive seats are listed at $7,256 in that stadium. Yeah, which New York is an expensive place to live, but their average monthly mortgage payments only $4,096. Rent is an average of $4,872. Yeah, it's almost double a rent or mortgage price in that market. In Dallas, the cheapest tickets for the July 14th semifinal, they're listed at $2,391. That's slightly above their average mortgage payment, which is $2,351. In Atlanta, the lowest price semifinal tickets are $2,208. That's above the average mortgage payment there of $2,149. And then you got Kansas City. The July 11th matches, well, the price average cheapest seats for that price is $1,567. Yeah, their average mortgage payments are $1,477 there in Kansas City. Yeah, can you imagine? I have a theory. Don't pay more than your mortgage for something that's going to last 3 hours. In Miami, the lowest price tickets for Colombia versus Portugal, that's coming up on June 27th. The lowest price to get into that game is $2,700. That's matching the city's average mortgage payment and rent, and for theirs. At least you're paying your mortgage to go to that game. Obviously, a lot of consumers have been priced out of this tournament. A live sports on TV survey of 1,008 U.S. soccer fans, they actually found that 52% had given up on buying World Cup tickets, and only because of the high prices. Just think about it. Then you got travel. If you don't live there, you got food, you got price, souvenirs, food, travel, parking. Unbelievable numbers here. But it kicks off today down in Mexico City. Mexico kicks off the tournament there at noon. Of course, U.S. plays tomorrow over there in L.A. at SoFi. So we'll keep you updated on that on the main event. And we'll do some football-related stuff here. Also, going directly out to the YouTube page. That's why you need to follow TME Media. Subscribe to it as well. And of course, all of our social media pages, including TME Media AZ, our parent company. Make sure you give that a follow. Folks, Pit Stop will be out later today. I know it's a day late. I wasn't feeling too hot yesterday. Whew, we got kind of rebounded on that last night and doing good today. So we'll get that out later on. So pay attention to that for racing stuff. I'll be watching the World Cup today as well. Well, we're getting that recorded and up for you guys. So it's a lot of fun here in the sporting world. We'll see you tomorrow, folks. 7 a.m. coming up on Friday. Coming up next, the main event. Dale Hillestray and I will get you started. And Dale takes off, and Uncle Lou comes in from 9 to 10. Lots to talk about, including the UFC White House card, folks. A lot of people are excited about it. Some naysayers are not, but it's going to be a phenomenal event. Get ahead of the action so you can talk to your friends and family about it. And if you're a gambler, you can put some money on it as well. But mainly, get the insight you need to know. Coming up on the main event, folks. We'll see you tomorrow here on McCollum on Business.